Hello, my dear friends. Today we shall be discussing MCQs on a very important and a very interesting standard, that is SA 315. Okay, yes, I have picked up certain MCQs which are right at the center of the standard. Okay, so come to question number 225 on page 45 of this PDF. Okay, yes, come on. SA 315 is what we are going to deal with today. We'll see that this standard is so simple questions, but you need to be so careful while answering these MCQs. Okay, so let's see what are the risks related. Question number 225, my dear friends. Kindly note and come to question 225. Let's not waste time because within 10 minutes we have to finish these MCQs. 10 MCQs in 10 minutes. Okay. Now, risk related to quality of services provided by the entity is a type of, okay, risk related to quality of services provided by the entity. See, understand. So, the entity, there is an entity which we have to deal with. This entity is providing certain services and, yes, checking the quality of these services. Quality of these services. Now, tell me, my dear friends. Yes, checking the quality of services is the duty of the auditor, or checking the financial statements components. For checking the financial statements components. So here, checking the quality of services which the client is providing is what? Quality risk, control risk. Yes, 1 minute. Audit risk, which risk, or none of the above? It is none of the above because this risk is a business risk. It is not an audit risk. Okay, we are not responsible for the quality of work which is performed by the entity. Okay, further. While assessing the risk, the auditor needs to consider. Now we are assessing the risk. We are performing RAP, risk assessment procedures, by understanding entity, its environment and internal control. While doing so, while assessing the risk, so risks has been identified. Now this identified risks are being assessed by us. So how will we do it? Yes, based on materiality. Firstly, material. It has to be material. So this is the point. We have to see how many times it is arising. Yes or no? So frequency is also important. Okay, so both of the above would be the right answer. Let's quickly go ahead further. Yes. While the auditor assesses the risk of material misstatement, who is responsible for corrective actions to be taken? Guys, while the auditor assesses the risk of material misstatement, who is responsible for corrective actions to be taken? See, understand. Here we are assessing the risk of material misstatement. Assessment of material misstatement happens by understanding the entity, environment and internal control. Setting up of internal control is the responsibility of management. So corrective actions need to be taken by whom? Management. We can only communicate the deficiencies to the management. Significant deficiencies in internal control to those charged with governance under SA 265. But it is the duty of management to take corrective actions with respect to the risk of material misstatement. Further, periodical review of activities within the entity. So here activities which are performed within the entity are periodically reviewed. Now, it is internal audit, control, check or questionnaire. When we speak of questionnaire, questions have been given which need to be answered as yes, no or not applicable. So this is not the question. Yes, internal audit, internal control, internal check. Internal control is the what activities which are being performed and the controls on that activities. So this is definitely not the answer. Now the question is between internal audit or internal check. Under internal check, if work is performed by Mr. Orange, yes, this work needs to be done what? Needs to be checked by Mr. Green. This is internal check in simple language. Yes or no? Okay. Yes. So here work performed, day-to-day operations which are performed by one person is checked by the another person. That is internal check. But under internal audit, we have seen that every activity has certain standard operating procedures, SOPs. Right? These SOPs, whether these activities are performed as per SOPs or not, checking this is a work of internal audit. So here my correct answer would be A, internal audit. Clear? Okay. Further, the auditor needs to conduct enquiries from management and employees separately. A, true. It can provide the information to the auditor that may not otherwise be communicated. Ultimately, providing the information related to both management as well as employees' fraud is important. B, false. If inquiries have been made from management, no need to conduct it further. C, inquiries is not a part of auditor's work. D, none of the above. So after reading the alternatives, I have realized that A is the correct answer, because inquiry can happen within the entity, with management, or within the management. When we speak within the management, within the entity means what? Yes, see, we have seen that information and explanation can be obtained from anyone, anyhow. Unrestricted access to information is to be given to the auditor under SA 210, preconditions for audit. Yes, okay. So we have seen that inquiry can be performed, and inquiry is what is a tool to obtaining audit evidence under SA 500. We have seen, right? So we can inquire management also, and we can inquire employees if required also. Okay, further, question 230. The auditor can make inquiry with management, operational personnel not directly involved with financial reporting, persons charged with dealing with allegations of fraud, all the persons mentioned above. Now, read the question carefully. Auditor can make inquiry with management, operational personnel not directly involved with financial reporting, persons charged with dealing with allegations of fraud. Now, A is definitely yes. C, persons charged with dealing with allegations of fraud is definitely yes. We need to inquire, we need to talk to them, we need to understand, we need to get more information from them. And operational personnel not directly involved with financial reporting, we have seen that auditor has to report on financial information, but he has to consider financial as well as non-financial data, right? So he has to consider these also. So the most perfect answer here would be D. Getting it? Okay, yes. Let us go to question 231. The factors that contribute to inherent risk can be, inherent risk means risk before internal control, right? If you remember, there it is a sunny day, you are wearing sunglasses. The moment you are wearing sunglasses, your eyes are at ease, but that does not mean that the sunny day has gone away. It still remains. Risk still remains. If you remove the internal control, risks are still there. So risks which are inherent in the organization. It may be because of inattentive management, related party transactions where risk is very high, management integrative. Management is what policies management is getting. Zero tolerance policy, honesty. It's a culture of honesty. We have to see all of these. So the answer would be, so here the correct answer would be all of the above. Further, assertions are used by, see, understand, assertions are used for preparing financial statements, and these financial statements preparation are a responsibility of management. So assertions are used by management. Very simple question, but see, so tricky. Risk assessment procedures are, oh my God, this should not have been there. Risk assessment procedures are exhaustive, inclusive, predefined, none of the above. Predefined. Do we know that yes, this risk assessment procedure has to be performed, or it is a matter of professional judgment? Every entity, every assignment is different. So it is the, yes, it is, or professional judgment. So this is definitely not the answer. Then exhaustive in nature means these have to be performed. Inclusive means yes, and whatever auditor feels right, he needs to perform. So what should be the answer here? Inclusive. Yes, inclusive. Risk assessment procedures are inclusive. Further, second last question for the day. Can the information obtained from previous audit of the entity be used by the auditor for determining the risk of material misstatement and audit evidence? Once again, can the information obtained from previous audit of the entity be used by the auditor for determining the risk of material misstatement from audit evidences? That means they are saying, can audit evidences of previous audits be used? Here in this case, we need to see whether there are any significant changes. We need to check the effectiveness and risk as well. Okay, yes. So only if the previous audit was conducted by the same auditor. Entity is same, auditor is same, still circumstances may change. So this is definitely not the answer. Option C, only if previous report shows clear opinion. Previous report shows clear opinion, that is for the previous year, but we are concerned with the current year. So this is definitely not the answer. Now let's read option B. Only after considering whether change have occurred and its impact on current audit. Yes, so B is definitely the most correct answer. Let's go ahead to the last question for the day. Assertions made by the management can be related to classes of transaction, balances of accounts, presentation and disclosure. When we speak of classes and transactions, that means we are referring to P&L account. When we speak about balances of accounts, that means we are referring to balance sheet. And when we are speaking of presentation and disclosure, we are speaking of notes. And all of these together are nothing but financial statements. An auditor has to report on financial statements entirely. So assertions can be relatable to all of the above. Okay, yes, so these are all the MCQs on SA 315, which speaks about identifying and assessing the risks of material misstatements through understanding entity, environment and its internal control. Okay, yes, all the very best. See you soon with another standard and 10 minute में 10 MCQs.